Now move on and let's address that 103 crore rupee order that Texmaco Rail has bagged. We've got Sudipta Mukherjee, the MD, joining in on the show right now. Mr. Mukherjee, good to have you on ET Now. Hi, morning. Help us understand what exactly is this 103 crore rupee order? What's the timeline and when does it reflect onto your books?
Good morning, Aisha. Good morning, everybody. First of all, getting order is always a happy moment, and but the significance is that it is in line with Government of India's plan to modernize and make efficient the food grain transportation of the country. It is based on the national plan on handling, storage, and transportation. So the government is coming up with various modern silo facilities in a PPP model, and those silos are to be connected through this optimized innovative solution of railway. All those silos are connected and monitored on a real-time basis through technology, and these railway wagons are going to ply between the silos. So in a way, it's a significant leap forward for modernizing the food grain transportation in the country from the traditional bag movement to a bulk movement. So having said so, getting that order and to getting the opportunity to contribute in the mission to make this efficient transportation is a pride moment for us. And of course, this is to be transacted or between 10 to 12 months. And the first lot of such wagons, I think, could be inducted within maximum 8 to 10 months time.
Right, okay, Mr. Mukherjee. Hi, good morning. This is Nehi also joining in. Let's talk about your order book once again. With a strong order book of over 7,000 crore rupees, help us understand what proportion of it is executionable within FY26 and what spillovers do you anticipate into FY27? How would they impact your financials?
So, majority of it will be executable within this financial year. And as you see that I spoke last also that it's in work in progress and the company is very hopeful about good order flow, continue momentum of it from railway, from private sector, as well as from the global market. So we see majority of it to be executed within this financial year, but there are certain strategic orders which are span over into 24 months.
Indeed, but Mr. Mukherjee, what's the visibility forward? Because your order win in the book size is already over that 7,000 crore mark. Where do you see that headed for the full year?
See, we did a top line of around 5,100 last financial year, and we are hopeful to grow over and over that. I mean, you can calculate, but we are hopeful to do better than the last year. May not be the whole 7,000 in this financial year, but there will be better off, we feel, from the last year performance to a margin of at least 15-20%, if not more.
Interesting. And how confident are you of sustaining this delivery momentum after resolving the wagon wheel set supply issue from Indian Railways?
Very good question, Aisha. This makes the whole strategy in place. As I said, that there are three off-takers so far the wagons are concerned. One is the Indian Railway, another is the private entities, and the export market. For private and export market, we have no dependence on the so-called supply from Indian Railways. And with a growing order momentum in that and our confidence in terms of closing few more deals this financial year, which will be mostly delivered within this financial year and something will spill over for the next. So far the overall planning of the company is concerned, you may see a change in the modal share of the rail versus private and export. But that's a very welcome change. And on the railway front, I must say that things have started improving significantly. So it's a very good, I mean, a movement towards all positivity. That's what we feel.
Mukherjee, before we let you go, we need to talk about the export contract that you've bagged. You've secured one of the largest export contracts ever by an Indian freight rolling stock player. Can you give us a sense of the scale, geography, margin profile versus domestic orders?
Uh, the execution will start this financial year itself. So you will see the benefits of that into the balance sheet. And so far, the margin profiles are concerned. I also mentioned earlier that these are kind of project where you bring in a complete solution to the customer. So the margin profile normally is better, and so far it's not a commodity product. So it is always on the higher teams. So which significantly contributes to the, I mean, a business, a good mix of commodity and a specialized segment. So that's why we are hopeful that these things are going to improve the bottom line of Texmaco in the coming days.
To hear that, Sudipta, as always. But thanks for your time. Good chatting with you.